All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for July 9th, 2022. It's some strange behavior in base camp and campfire wasn't letting me log on, but we got that sorted. So let's go ahead and get started with. We're going to take a look at the sector's slope z-score first. And we had some recovery this week in all the prices, and looks like tech is leading the way on the recovery. The market turned at -1. Finance in second place. Energy made the turn also, but it's at 4 sigma, so there's still a lot of weakness here. Also has the greatest amount of recovery possible. Materials have been really suffering. The metals have been especially bad, and so I'm going to continue to look for weakness in Alcoa, Cliff, U.S. Steel. But there has been a broad slowing of the sell-off and a little bit of stability brought in. So the last time it did this, it looked like this, and there was a strong swing recovery. So we're going to see if the same thing happens here. Quick comparison of the offense versus defense here. XLY stabilizing, XLP, the staples, getting better. So we'll see if that's going to lead the market out of this little gap. Is the thing, your Walmarts, McDonald's, Home Depots, Coca-Cola. They've actually been pretty strong. We're going to see some of those in Ken H symbols here shortly. So I'm looking towards that. So this looks like the beginning of the offensive team has come on the field and is getting ready to start playing. So we're going to see if they have any strength. All right, we're just going to go ahead and jump in and start with Alcoa. And we're using the weekly, daily, hourly, actually the 65-minute to be precise. This was all part of that harsh sell-off in the metals and the materials. That downward trend is still in play, but there has been that little gap up which held on Friday and stabilized into this nice tight breakout box. So I like this one as a critical state in both directions. It's ready to play. The short side is easy to believe in because if it breaks through 48.80, then it gets down here to 42 pretty quick, and that's a 5% sell-off. But it could also go to 50 if it's able to break out of that 5-hour or that 5-day box, which is another 5%. So that's more like 10% there. So I like Alcoa in both directions. You can just see the magnitude of that move over here on the weekly. That just commands your attention. That strong move out of the summer, fall, summer, fall, and here was where the intention was, hey, there's the symmetry, this should hold and resume, but it didn't. So instead of that upward move, you get that harsh downward move. So that's this move here. And now stabilizing, ready, and it has to get above that 5-day or out of that 5-day box. So 50 is kind of the tell. That's this level right here has to break above that hump of the dragon, which is right here. So that's a good tactical trade. Yeah, I like that one a lot. Alcoa, one of my top three. The Qs, this is that strength and tech that we saw on the sector spiders, their slope statistic. This is looking like a support level here. Now, the last time we had a support level that moved up, and then it couldn't hold. That's all part of that bear this time. So the support level has held. It's got to get through 310 from here to really be useful. The failure back down to 280 is minus 7%. So we got to be mindful of that one. But here's a Kata 2 shaping up nicely with support there and here on the daily. And you like that to get to 310. And the risk box is not large, 70 cents on that quick break. Yeah, so because it's already testing that high. If it can get out of here and go. So let's be on the lookout for tech names that are ready to lead the way. I have to believe that Tesla's going to be in a position to help with that. If there's a belief that Musk is not going to be on the hook for the Twitter deal, that's going to be very helpful to Tesla stock. And that's the way the market is kind of pricing that in right now. So let's be on the lookout for that. All right, here is Devon Energy. This is all part of that harsh energy sell-off that we saw reflected in XLE. That was just absolute free fall here, which has tried to stabilize once and twice and is now in this tight zero state breakout box. Strong move in either direction is possible. He's playing a 50-cent risk box here. I like that one because if this starts working, it should never come back. And then if it breaks above the 5-day, then peak of the dragon, peak of the RL10, and 10-day high are all in play. So that's what an energy recovery looks like. And then a breakdown below, I would say below 54, you really got to be on that to the short side. So even though he's playing 50 cents here, if it's a dollar sell-off, 50 short at 54 is really where I think you make your money. Dayquo New Energy. So this is semis and materials. Solid three legs of support. Here's where the previous, trading range box was. So what we're going to see here is if what was once resistance can now be support and support this bounce up and has to break out of the 10-day high. And if it does, this thing is free and clear because it's already well above the weekly resistance, which is around 72. That's this. This is long-term resistance, this 72. That's this. And that's all of this. So it's made the break. And now the last thing it has to do is get above 80. That last little spike up move. But it's beyond the statistical resistance. So any breakout from here you can pile on. You don't have to wait for 80 to play that breakout. I really like that one on the upside. The downside is also easy to see. If this doesn't hold, then it's back into this. Then it's back into this trading range, and now 66 is within range. So if you're playing about $1 of risk, that's 7-1 on the downside. So that one looks great in both directions. I like that one. That's a new symbol to me, but I'm liking the way it's setting up. Food. This is more of a swing trade than it is an intraday. There's not really enough volume intraday to make this play, but the swing trade is certainly compelling. This was the inflation trade, and then the bottom just fell out of this thing. But the rebound has been nice, and this was a pretty convincing weekly move right here. Buying quality on sale, I think. And so you have a 1, 2, 3 already. It's left behind that, price level of 19 and 3/4 and 20 as support. So I take that as strong support. And you're only talking about a 50-cent risk. And then the target to 2075 is clear. And then this is not much resistance at all. You should really just look at that as the gap. The next price level is probably this one, or he's got noted 22. So I think if it can get through 2075, then you have a really nice swing trade. So that's certainly worth playing. I think the short side, you can give it all the way to 20 before I would short that on a swing, with the second position at 1950. This is another new symbol to me, so let's see what we got. Resources Connection Incorporated, industrial sector, business services. Boy, you sure like that SSC or COTA 2, actually, don't you? Wow. 1, 2, 3. That move was reversed so sharply that you can see that there was barely a budge in the RL10. That thing has just moved hard and stabilized with support here and ready to continue. I think that's climbing the wall of worry, testing that previous high. So if that breaks above, that's all free and clear. I think you like that one. The short side is also interesting because I think this will come back to here pretty quickly, and you can see you got 3-1 to the downside. So that looks like a nice one in both directions. New symbol to me, but I like it. Hey, where does that one come from, Ken H? What got you to that one? Because I really like that. Looks like a fireworks play to me. So here's a test of that double top. That's why you love the SSC. That's why you love the COTA 2 and a COTA 2. Now, you can see that it's holding support in this trading range, right? Here's that trading range. So if it can break out above 21 and 21.25, that's that emerging dragon. That's going to be good. And right now you can actually get this with a tight wrist box here to play to here. If that starts failing, you can capture that move. If it fails out of here, it's coming to 2025 and then probably 1950 and then testing here. So the downside is easy to see. But you actually have a tactical trade here, and then if it breaks out, then that thing should be free and clear. So I like that little breakout box right there. But boy, that thing sure gets AT&T can sure get volatile on the swing. This is why you pay attention to previous support levels. And This is why you pay attention to resistance levels, because here's the big trading range, and like fireworks, if it can break out of here, off it goes. But if it fails, it's all the way back down to here, and you don't have much. You don't have much of a risk box to work with. So you've minimized your risk, maximized your payoff. Twitter, watch this thing crater tomorrow or Monday. They don't have much of a leg to stand on in the Musk debacle. I think that's going to get smashed down to 30, because that's going to break quadruple support, and that's just going to drop like a rock. There's no long-term upside to this thing. Chances that Musk ends up really buying them at 54 is pretty small. Although there's your COTA 2. I think it's much more likely for that breakdown. That one is so connected to the news that you should only be using really speculative money and be ready to cash a good portion of your winners, because this thing changes with every new headline, and you're always going to be surprised by that. I'd stay away from it. The Qs, I think we already saw that one. Yeah, we already saw the Qs. Sorry. Dominion Energy. The big D. Utilities. A changing of the guard after a lot of disbelief. Held support. Held support where it was supposed to. And then that rebound was pretty amazing. So there's your SSC. There's a COTA 2. It held support here like it's supposed to. It tested this once. And now if it holds here, this looks like a COTA 2. And so now the test of 81 should go better, because it's had a running start at it. And then it looks like 83 and then 85 to the upside. I like the breakout. Yep. So 81 and 78 is the tactical trade on a 40-cent risk. So that's justified just for a quick hit. But if it breaks out from here, getting your second position on, looking for 83, and then a third position to 85. And then one position short to 78. If that fails, a second position. If 77 breaks, then I think it gets to these price levels. Boy, that's a perfect fence sitter right there. You have something that was, here's a clear upside, a clear downside. This thing is smack dab in the middle in a really tight little risk box. And you've got large moves, 5, 6, 7 to the upside. 1, 2, 3, 4, 5, 6, 7. Large moves to either side. That's what we mean by fence sitter and narrow volatility, ready for a large breakout. And then the momentum traders will pick this up and push it. So that looks good to me. Specialty resale, consumer cyclical. Here's another new symbol to me. caught a 2 on the weekly, emerging dragon on the weekly, caught a 2 on the weekly, and now it's getting ready for that emerging dragon again. And if that goes, there's nothing to hold it back. There's your Kata 2. There's an SSC. There's a Kata 2. It broke out above this for the emerging dragon. It's ready now to break. It's already above that break. And it doesn't take much more to go. That's free and clear. There's no resistance overhead whatsoever. The downside is easy to see. I think I'd be, if you play this as a tactical short to here, and it starts to recover, I would cash that win. But if it can break below 250, then none of this stuff is support until really you see it get back into this region. So the downside is even easier to believe in, because this will still be a nice move. It's still in pretty good shape down to 230. Like if it came back to 230 and recovered, you'd still be buying it in here because you're buying it on dips. So you can make a nice tactical short inside here, even on something that has moved up this strongly. It doesn't really collapse until it gets below 230. And then you should have 2 positions short by the time it breaks 220, because then it goes to here and here. Rivian, the alternative to Tesla in the electric car space. This has been such a brilliant short-term tactical trader in all of this volatility, just cashing winning lottery tickets for short wins every time it gets to an oversold condition, every time it gets to an overbought condition, and cashing your money, cashing your winners. This one is important because it's now at this critical fireworks stage where it is blown up to up here, and now it's going to test. If it can break above 32, it will have left behind all of this. That's not much resistance. The next target is like 38. So I think you got to like the breakout possibilities. Plus, if there's a sympathy push from Tesla, then Rivian's going to do well. And then the short side is easy to see down to 26. That's a $4 risk on a $2 box. So 2 to 1 in both directions. That's a good trading symbol. Pfizer. You can see the narrowing of this little breakout region here. So here's the key price level. Around 52 is the key price. So 52 is the key price. So it's above that. So 52 is going to act as a base. Now it has to get above, say, 54, 55 to be persuasive. And then it can get to 60. So there's a $5 opportunity up in here. And you're looking at, a 50-cent box here. So long from here. Then if it can get above 55, 60 is certainly in sight. And then the downside is very easy to see. It should get back to 51 on this failure. So that's easy to see. So you have a nice trade in either direction. Pfizer, that's a no-brainer for a short-term tactical trade. High priority. McDonald's has been a real source of strength in the staples, and now it has managed to come back up to test this emerging dragon up here around 255. So if it can get through 255, you think 264, say 269, two really nice moves to the upside, about plus $20, and you're looking at about $1 risk. Yeah, the downside is easy to see also for nice clear targets. There are other symbols that I would rather be short because this has been such a powerhouse of value play. I would rather see this break out to the upside and go. In a generally improving market, that would be helpful. This would be one of those that's a no-brainer. But again, you can see the power of the SSC, the COTA 2s, in oversold conditions that lets you participate all the way. But now this is looking like a fireworks breakout. Is there another leg up? Is there? We don't know. If there isn't, it falls back to earth pretty quick. So this is a nice channel trade in that sense. Alcoa, I think we already saw this one. Yep, we started with that one. So that's all of them. Good looking set. So tomorrow morning, 10 o'clock for the Euros for lesson 3 and Creativity 202. Then the evening podcast at 8:30 as normal. Got my daughter moved in to Kansas City, all nice, moving her from Lawrence over next to KU Med Center where she's working. So really nice apartment, twice the size, and the money she saves in gas more than pays for it. So this is a big step up. We had a good family times today. All right, guys, take good care, and we shall see you tomorrow.